Now, some of the stocks that give us hope are stocks like Cholamandalam. Net interest margins were steady for this company at a time when NBFCs have not done well. This is despite high cash, while asset quality was definitely stable. Loan growth too on the healthier side. Arul Selvan, Executive Vice President and CFO at Cholamandalam, joins us. Good morning, Arul. Thank you very much for joining us. Just take us through the nuances of this quarter. You've been able to do a 23% rise in AUM. Are you getting somebody else's business, those who are weak and not able to raise? Is this an improvement in market share that you're seeing?
Yeah, see what has happened is we, as I told earlier also, we have this bouquet of products. So while we have degrown on the heavy commercial side, we have grown on the light commercials and the other segments of the vehicle finance business, as well as on the home equity front, which is our loan against property business. From a geography perspective, if you see, we have grown more on the north and west, where the competition has started to weaken because of the liquidity issues, as well as asset quality issues in their respective books. So this has helped us grow in the north and west, and east and south has held their fort. So our growth has been pretty decent in this quarter, I should say, and thankfully we were supported by adequate liquidity to fund our growth, and so we could keep the momentum growing.
Okay. Has liquidity improved now? I mean, today the 10-year is at 6.35. Has it rubbed on to people like you?
See, the problem is liquidity is plenty, but it is with banks. The banks are lending to us at a very high rate, which is, I spoke about this earlier. The MCLRs have not come down, while the bond rates have come down, but there is not enough liquidity in the money market where bonds are available at plenty. So there is a lot of restriction on the there are a lot of lower levels of fund availability from the mutual funds, which are the predominant players in the bond market. So we don't find long-term money coming in, but there is a lot of short-term money, which is like CPs are plentifully available. But given our ALM constraints, we could only do limited amount of CPs. We don't want to take too much of short-term risks here. The other factor is the new regulation by RBI that 40% of our cash credit, the consortium limit needs to be withdrawn by way of working capital demand loans, has also put pressure on the cost of funds, because 40% of that money is getting blocked at the MCLR levels, and we are not able to sort of get the benefit of the market rates on the short term side of the money market.
Okay, Mr. Selvan, good morning. Congratulations first of all on such a good set of numbers in such a tough environment. But I wanted your thoughts on what's happening with vehicle disbursement, because there as well your vehicle disbursement growth is 22% year on year at a time when there's such a big slowdown going on in the commercial vehicle space. So how is it that you're managing to do this kind of business, and do you foresee any slowdown at all, or do you think that things will pick up from here on?
See, what happens is when there is a slowdown in heavy commercial, used business goes up. We have been pretty steady in our used business, and in this segment we have moved up our numbers in the disbursement side. For example, if you see the used business, we have two segments: used and refinance, which is one is for the buy and sell category. The other one is sort of a refinancing the existing customers on an existing used vehicle and encumbered vehicle. These two segments used to be around 25% of our portfolio. The disbursement in this, we could move it up to 30% in this current quarter, which could give us the boost in this segment. Also, in cars and MUVs, we focus on the mid segment and in the rural areas, which has helped us to grow the cars and MUVs portfolio also, in spite of the overall cars and MUV industry seeming to be slowing down.
You know what, we heard, Arul, that even LCV demand has gone down and inventories have picked up. Was it Aisha who told us? There are people who are saying that now it has begun to hit even LCV. Be that as it may, tell us your experience. Are you seeing green shoots in terms of demand recovery? You said South and East was reasonably good. Give us some color on how the month of July has looked. Is there something better than what was in June, or is something worse?
July has been, I mean, it is till we need to close the accounts. As you know, most of the sales happen on the last 2 days, but it is fairly good. What is also happening is the monsoon, though belated, has now sort of fairly spread across India. So we expect the fallout of the good monsoons to come in this quarter and the next quarter. So we expect growth to be reasonably good in the coming quarters.
And what will you do by way of margins, you think?
The margins, I'm waiting now for the RBI policy, which is expected this week, and at least after that the banks will be considerate enough to move down the rates. But apart from that, we are taking other actions. As you would have seen in the first quarter, we have done external commercial borrowings of almost 270 million, which has been done at lower rate than what banks lend to us, and we have some more in the pipeline on such external commercial borrowings. We would be tapping that.
Now you can do ECB. ECB end use has been liberalized overnight by the Reserve Bank. Will that be something you can access? 7-year maturity bonds.
No, the existing levels itself are more than adequate for us, and we generally try to do it within the 3 to 5 years segment of the ECBs, because that is a perfect match to our asset side. While the 7-year number is more related to infrastructure companies, we will try and see that. What happens is we like to completely hedge the external commercial borrowings. As we go longer on the tenor of the loans, the hedging cost becomes more prohibitive. So we try to keep our borrowings in the external or the overseas side within the 3 to 5 year segment.
Okay, just one question from my end. You said that 30% growth was in the used vehicle finance business, but over there as well, there's an expectation that there's going to be a slowdown, because we're going to see this transition to BS6 and the new norms, etc. Do you fear higher NPAs from that used vehicle business?
So the used vehicle business again is a very large, sort of a bucket we talk about. You need to again, sort of break them into niches, which is like a 5 to 10 year old to 10 to 15 year old and 15 to 15 year plus old vehicles. The demand is coming down on the 15 plus year vehicles because there is fear that the new scrappage policy, etc., will impact further resale values of these vehicles. So people are moving up the curve on the vintage of the vehicles. So people are now preferring both the 7 to 10 year old vehicle, which is where we have been always focusing on. The other side, the demand side also, what is happening is the lot of vehicles are coming into the used market much earlier than what it used to be in the past. Earlier, people used to run the vehicles up to 7 years, 8 years before they sell it as a used vehicle. Now the churn in this is faster because the load providers are insisting that people use newer vehicles, which is let's say around between 3 to 4 years old vehicles, and so they are forced to sell the vehicles. So there is a supply and there is a demand in the 7 to 10 year old vehicle bucket. That is where we are focusing on, and that's what is giving us the good amount of churn and the good amount of disbursement in this portfolio.
All right, Mr. Selvan, we leave it there today. Thanks a lot for joining us. That's Cholamandalam. That stock has again recovered from the low point of the day, but the market itself, after recovering quite a bit,